Okay, so Dino, lovely to have you here this morning. Fortescue's always been one of the more fascinating companies, I think, and one of the more innovative in the industry. What does the reshaping of the Fortescue business look like to you?
Well, thanks, Jennifer, for inviting me along to talk about some of the great work we're up to, and it's a pleasure to be here amongst colleagues, actually, and I really connected with what you're talking about, Adrian. We really need to get cracking on this and have the baton. So for us at Fortescue, we've built a pretty successful company over the last 20 years, and Jennifer, you spoke about some of the history of this great organisation, and the story about iron ore is quite well told. And our chairman really started off not really a mining company, actually. It's a project development company and a fantastic operator that's underpinned by a very, very unique culture, and I can speak to that. We're now diversifying our portfolio, and we've seen a significant market opportunity arise in energy diversification. But one of the lenses that's not really told is our technology vertical. So happy to speak about any of those today, Jennifer.
Well, I'd certainly like to talk about the technology vertical and of course, the whole energy transition. And you've got a very ambitious timetable for that energy transition in terms of Fortescue's own operations. People say it's too ambitious. What do you say?
Yeah, I think like with any change, often it's met with some criticism. Just over 12 months ago, we announced a net zero, scope 1 and 2 ambition to be zero by 2030. And just over 12 months on, we've actually upped the ante. So now we're talking about real zero, no offsets by 2030. And happy to progress that in that 12 months, we've actually moved, similar to what Adrian showed on the chart here, is a lot of the technology, we're really surprised that it already exists. And for us in the mining industry, sometimes we take a very conservative lens on how we try to solve our problems. We really just had to look a bit to the left, a bit to the right, bring in some diverse folks into our organisation, and all of a sudden, these problems, which seemed like Mount Everest, weren't really Mount Everest. A couple of weeks ago, we launched the first production-ready battery electric truck. Nobody thought that was possible. Within 6 months, we cracked the technology for that. And soon, you'll only see zero-emitting haul trucks in our mines.
So does that mean this focus on battery electric trucks now, is the idea of hydrogen, being powered by hydrogen, has that gone? What does that mean in terms of the Pilbara? What does that mean globally?
Yeah, I think this revolution, as has been mentioned before, if you bear with me for a second, if I can get a little bit technical, it amuses me a little bit, the debate between hydrogen and battery and trolley assist and green fuels, for instance. In the future, we will not be beholden to the OEM who sells a single product. And us miners have had to take that product and design our mines based on an old combustion system. In the future, we're going to look up, we're going to look across to see what energy is at the source of where we want to liberate that ore body. And now, all of a sudden, you can design your equipment based on the areas, the geographies that you work in. So for us, at the core of everything we do, we believe electronic powertrain is the future. So basically like your EV or Prius at home, where you have electric motors driving wheels. And then the system that generates the power, which we convert to electrons, can be agnostic. So that's where hydrogen fuel cell technology, battery electric applications, or even ammonia or green fuel-based combustion engines can plug into that powertrain and power the trucks of the future. So we are investing in all three of those technologies, and happy to report we're nearly production ready on all three fronts.
So obviously there's a lot of interest in the industry about how you do that in a commercially viable way, and concern about the costs of going green. How do you see that?
Yeah, sure, and we were not different to that 12 months ago. And we have a sneaky way to set these crazy targets, right? But what it really does is make you look further afield than what you're conventionally stuck with. And we've actually found, and again been surprised, that the offset of the cost of the diesel was significantly more than we thought. The amount of energy you can actually get back from the traction motors was more than we thought. And the life cycle and second use of batteries was far better than we thought. So we're pretty proud to say that our first production-ready fleet will be on parity with a diesel equivalent. Now, that has never been thought was possible. So imagine that, the first generation of technology to be on parity with a technology that's been maturing for nearly 100 years. So we anticipate in the future that even becoming more productive, and we've got our second generation battery and powertrains already in development.
So when you say that it'll be on parity, what time frame are you looking at for that now or next year in terms of a scale development of that?
Yeah, so for our trucks, we have a lot of trucks, as do most big mining organisations, so it takes some time to build them.
Yep.
So in the next 3 to 4 years, you'll see the complete conversion of our fleet from a hydrocarbon source to a green source. And that fleet will be an economic investment from day one.
Wow. Now, we've seen that POSCO's announced an HBI project at Port Hedland. How far off are you talking about for any type of idea of green iron at Fortescue?
Yeah, I mean, probably a lot of people are looking at green iron. The opportunities really, when you think about the reduction of cost of solar panels and wind and our amazing relations that we have with some of the vendors in that space, we'll continue to see the cost coming down. So for us, as soon as the cost of the renewables gets low, and we see a line of sight for that quite imminently, it makes absolute sense to start looking at green iron development in the Pilbara. We really have all the ingredients. You've got the iron ore, you've got the amazing people, you've got the sun and the wind. Why not?
Well, why not? We'll certainly hold you to that at next year's IMARC, I think. One of the things, though, that you talked about with green iron is how soon you think that is going to spread around the country, or do you expect Fortescue to be a leader in that?
Yeah, look, it's a great question. The costs needs to come down a little bit more. And then there's 3 or 4 different technologies that we're keeping a close eye on in terms of the reduction of iron to produce the green iron steel. And some of those are off-the-shelf technologies. We're seeing them develop into Europe and some parts of Asia already. Then there's others, like what we're doing is a wet electrochemical process, which actually doesn't require the hydrogen at all. So if we can get a breakthrough of that in the next few years, that timeline may be coming forward a lot faster than we first anticipated.
Okay. One of the things you said to me was that iron ore is one of the critical minerals that people don't talk about in a decarbonised future. What do you mean by that?
Yeah, again, I often find it interesting, and having done some work in the States with the critical minerals strategy, the amount of steel that's actually required to decarbonise the planet is huge. It actually, if you took the volumes of all of the other critical minerals combined, the amount of steel required would still eclipse it by 10 to 1. So it's a unique position to be in as an iron ore supplier, and soon to be green iron ore supplier, to feed into a future which we believe is very bright in terms of demand for iron ore as the world needs to decarbonise.
Now, you talked about sneaky ways of setting setting targets. What do you mean by that? And how does that work in the Fortescue culture?
Look, I think the story is well told by our chairman. And entering into the organisation, just into my 3rd year now, it's a fantastic place to be when you harness diversity of thought, entrepreneurial spirit, and a lot of those mythical challenges that often our industry puts in front of itself just evaporate when you have a huge, big, hairy, audacious goal that is being set. And you don't fear it, you actually embrace it and think, okay, it's clear, the science, it's clear we need to move. How do we then solve some of these problems? And some of these problems are being solved by the motor racing industry, the farming industry, pharmaceuticals. We're just adopting those technologies now into the mining context and solving these Mount Everest style challenges.
And how does something like taking over Williams Advanced Engineering, how does that help you progress this?
Certainly, I think the race for talent that's been already identified here, the motor racing industry has this unique attraction for die-hard STEM people. You go to a place like Oxford where all the name brands of the Formula One industry are, and you can just feel and live the passion for entrepreneurship and engineering prowess. And you put something like, I'll use the example of the DC-DC charger that we needed to crack. That's one of the most important breakthroughs in decarbonisation, that we feel confident. We can charge a full battery for a haul truck in about 20 minutes, okay? You go to the racing industry, and they've been doing this for years. And you sit there in the workshop, and I did this with one of the electrical guys, and overnight will build the inverter you need for our application. So then our ability then to scale that up and manufacture it on mass, which is really what mining does, we move a lot of volume. That marriage is unbelievable. So that's why for us, the Williams Advanced Engineering pickup, in hindsight, was probably one of the best investments we have ever made.
Okay, in terms of innovation, one of the other things, the challenges you've done is Iron Bridge. There's a few hiccups with that, but how do you see that progressing?
Yeah, thanks for reminding me about Iron Bridge. Iron Bridge is such a unique product, right? It's 67% high-grade iron ore, which already makes it a perfect precursor to DRI-based green iron manufacturing or electric arc furnace. It's the natural product. It's also an amazing product to sweeten the low to mid-grade sector out of WA, particularly for the blast works, because it has this unique stabilising effect. Technically, the project has worked exceptionally well, and we're actually ahead of the curve for some of our commissioning activities. We've indicated it's going to take about 18 months to 24 months to fully ramp this up. It is a unique flow sheet. We invested $500 million on a huge pilot plant to see if it worked, and it has been working for some time. And we're about to send off our second shipment in the next month or two.
Right, okay. Well, we're going to have a panel on China later in the morning. So I was just wondering, obviously there's always apprehension about the Chinese economy. I mean, obviously Fortescue is very, very dependent on Chinese demand continuing. How do you see that?
Yeah, great question, and I'm heading there this weekend actually to meet the team and be part of Anthony Albanese's visit, which for us is a great sign that the relationships are certainly improving. But for us at Fortescue, we see China as a long-term critical partner for us. They're cornerstone to the success of the business for the last 20 years and will remain so for iron ore. And also as we now pivot into the new energy sector and also that technological vertical, we see China playing a critical role to continue to drive down solar, wind and electrolyser costs, which for us will see the breakthrough for everybody to be able to do what we're doing very quickly. So our relationship with China and Australia is fundamental to decarbonisation for the future.
Right. Well, I'd like to thank you very much, Dino, for a fascinating talk about what's happening with Fortescue, and wish you luck for the future. And something tells me we'll be talking about green iron quite soon.
No worries. Thank you very much. And I'm open for business, so to speak, but also open for any dialogue, particularly interested in some of those junior entrepreneurial companies that we're seeing out here. Please get in contact. We can't wait.
All those ideas, and you like looking
laterally.
We love
the ideas.
Okay, thank you very much. Thanks for a great chat, Dino. And I'd now like to welcome James Agar, Chief Procurement Officer for BHP, and I'm going to talk to him about the importance of supplier and community partnerships to create value. Thanks, James. Well,
thanks, Jennifer.
You talked about bringing the best of BHP to the outside world, and the best of the outside world to BHP. What does that actually mean in practical terms?
Well, I think it means the IMARC conference really in practice, where there's been a lot of discussion about being open for business, and this is the place where collaboration really happens. I mean, you walk out in the exhibition hall, Jennifer, and you can see every name in the mining industry. It's the supermarket, the global supermarket of the mining industry. And our message last year was, given all the big opportunities that we see coming at this industry, the big mega trends of demand, electrification, decarbonisation, urbanisation, all these really positive forces for demand, the mining industry won't be able to meet those opportunities unless we collaborate. And so that was the message last year, and we've been working hard at it over the last 12 months.
Okay, so you've been working hard at it. What examples of progress can you give us?
Well, look, I think there's been a lot of good discussion already about trucks and electrification, and we've got some great examples there of some really, really important collaboration with the big OEMs, Caterpillar, Komatsu, and we're excited also to be in the next 12 months trialling electric haul trucks on our own sites, and we've got a really exciting trajectory there as well. But the implications of electrifying a mine is so much bigger than just the truck itself. It's the whole ecosystem around the truck. And a good example is the partnership we have with Bridgestone and Michelin on the tyres side. Because as we've just heard, battery life, preserving the battery life is going to become a key competitive advantage for the mining industry. And tyres are a major force in preserving that battery life. So we've been partnering with Bridgestone, Michelin, talking to them about the path of electrification that we're on and collaborating with them to reduce the rolling resistance of the tyre. If we reduce the rolling resistance of a tyre by 1 to 2%, we can significantly increase the battery life. And equally, these electric trucks are going to travel a lot faster than the traditional diesel engines. So we also have to increase the tyre's durability. And so that transparency, being very open with players like Michelin, Bridgestone about what the challenges are for us, what the opportunities are for us, and how can we sit down with our engineering teams, our technical teams, and really work on solutions together.
And so, for example, if you're having a conversation with Caterpillar or Komatsu, how do you start that? What do you explain exactly what you want, or do you kind of just toss around ideas? Do you say what your targets are and they must be met? How does that work?
Look, that's a great question, Jennifer, and it really goes to the heart of the transition that we're making around being far more transparent with our partnerships. I think historically, critics of BHP would have said we would have gone to the table with very prescriptive scopes. This is what we want, this is where we're going, this is what we want you to do. And it was hard to do business with BHP, I think, with such a prescriptive view around what we needed. And I think one great thing that's happening at the company is we really are opening ourselves up. We don't have the answers, and we want our partners to challenge us with solutions with blank canvas scopes. If we're very clear around the purpose, where we're going, what we need to do for the industry, we're open for ideas.
So that kind of moving away from that prescriptive approach, right? How do you do that as a company, particularly a company like BHP, which has been so successful with the alternative?
Look, I think partnership, transparency, they're nice sentiments. They're easy words to say, but what you're getting at is how we made that really systematic. We've got an operating system at BHP. It's the BHP Operating System, BOSS, which is very much a disciplined operating system. And what we've done is bring that from the inside out. We've brought it to our supplier relationships. And we've been really clear around setting a common purpose together and building routines around that purpose, built around transparency to hold each other to account to make sure that we're pulling in the right direction.
So how does this kind of go with advancing decarbonisation in that sense? How do you, because you've got lots of small suppliers, big suppliers, you know, do you put that in the general goal to all of them?
Absolutely. We've been very clear around our decarbonisation ambition. We have our own net zero targets for scope 1 and 2. And that's really part of doing business with BHP. It's the first discussion we'll have really with our incoming partners around what are our big agenda items around decarbonisation, around inclusion and diversity, around supporting traditional owner businesses. These are the discussions we're having up front with our partners, as opposed to historically they might have been jammed in at the back end of a commercial agreement. And that's been a big change across our industry.
And with the idea of cooperating not only with your suppliers, but also with your peers like Rio and Vale, how does that work?
Yeah, we're also seeing a big change there actually. We've joined an alliance with Rio and Vale, as you mentioned, with Komatsu for a greenhouse gas alliance around electrifying our haul fleets. We're doing a lot of work, actually at the encouragement of our partners who sit at the table with us, and in the spirit of radical transparency, they say it'd be a lot easier for us to solve your problems if you and Rio could get aligned around what you want, for example. So that's been a really positive force, and you know, I think we are just scratching the surface on that industry collaboration. I think there'll be a lot more to come.
Right. And in the interest of the radical transparency you've talked about, what are the interactions or programs that haven't worked as well as you'd hoped?
Look, I think, you know, historically I would say one area of our business where we have been challenged around being too transactional is perhaps the partnerships we have with Indigenous businesses. I think there was a view that we were short-term focused, we were transactional in nature, and that's one thing that we've really made a concerted effort to turn around. And I'm really pleased in the last 3 years we're now spending from less than $100 million a year with Indigenous vendors. We're now spending over $400 million a year here in Australia. That's Aussie dollars. With traditional owner businesses. And the way we've done that is the dollars are important, but the partnership's more important. And so what we've done is, rather than go out with short-term scopes of work, little packages of work that can support an Indigenous business, we've gone out with long-term contracts, multi-year partnerships that allow Indigenous businesses to have the confidence to invest in their business, buy new gear, train their people, and ultimately become more competitive, which is good for them and good for the industry, good for BHP. And the power of that for our traditional owner partners is it provides meaningful employment for their young people, it keeps their people on country, and that's so important to them.
And in terms of your relationships with traditional owners, do those processes take a lot more time now?
Absolutely. I think dialogue is so important with our traditional owner businesses, listening so important, and that's a skill set that we've really invested in from board through to operational levels. It's the dialogue in the community that actually shapes the business decisions we make, and that takes time, but it's time well spent.
But how do you kind of manage that balance between the urgency of decision making and the need for change and what you're doing, with the idea of taking much more time to have negotiations and discuss things?
Well, I don't have a perfect solution for that, Jennifer. It's just one of the real positive forces that exists within our business. It's our chairman often talks about it, the tension point, the positive tension point between social value and financial value creation. That's where the rubber really hits the road. It's that kind of dialogue with the context of BHP's big agenda. That's where as I said, that's where the rubber hits the road.
So I know you'd obviously kind of have the same general approach no matter where you operate, but are there particular differences about operations in Australia compared to other countries?
Look, every jurisdiction is different in some ways. I think, you know, what we're seeing, we're investing a lot more capital in Canada, for example. We've got a major potash development in Saskatchewan, a multi-billion-dollar investment, and yeah, we found Canada to be a very supportive place for mining investment. Stable fiscal and industrial relations policy, very much behind the critical minerals stimulus program, and we found that to be a very positive environment for BHP to operate, and we've got an opportunity there which we don't get. It's really a once-in-a-generation, once-in-a-multi-generation opportunity to start a new 100-year basin. So we've got the Pilbara here in Western Australia, the Bowen Basin in Queensland, our South Australian copper province, and we've got so many years of experience there to shape how we start our process in Canada, and that's the great opportunity that we have to start a new 100-year basin and start it in the right way with First Nations partnerships, community partnerships, and bringing all of the stakeholders along for the ride.
Okay. Now, obviously, as procurement officer, you had a lot to do with supply chains, broken supply chains, what was going on the last few years. Obviously, things have improved, but how much have they improved?
Yeah, look, I think I was looking a bit more stressed last year. We had a lot of red on our dashboards, but we certainly have seen an easing in global supply chains. Goods are moving around the world far more freely than they were 12 months ago. And if you look at those big forces of the disruption with shipping congestion, freight rates, port congestion, all of that has now largely gone away, and we're seeing, as I say, goods moving around the world fairly freely. Manufacturing capacity is now sort of chewed through that backlog of demand that they were struggling to keep up with through the pandemic, and we're now seeing factories around the world largely being able to keep up with demand. Energy still remains a source of turbulence. Obviously, geopolitical trouble there is providing some upside risk to energy prices. And labour availability is the fourth area, and that's one area where we are seeing some positive signs around net migration here in Australia. Numbers have doubled over the last 12 months, and that's providing some easing, but there is a lag in terms of how that works through the system. So that's probably the fourth area: shipping, manufacturing, energy, labour. Labour's got the longest tail, I would say, in terms of those pressures.
And of course, the other issue is inflation. That's really been a concern recently, which hasn't been for a decade. What impact is that having?
Well, look, we saw across BHP's cost base last year, our costs were up 10% across the board. Look, I think we did a great job with our partners around finding ways to make sure that price increases were linked to productivity gains. And as a result, I think we've done a better job than the industry in terms of keeping a lid on costs. But the pressures were acute, driven by those forces I mentioned. And look, pleasingly, we are seeing upstream conditions ease. If we look at the producer price index, some of the big machinery indices that we track and build into our contracts, we're starting to see flat outcomes in terms of pricing signals after a period of what has been double-digit percentage increases. So this is a job for the procurement team to make sure we convert that easing upstream pricing signals into better unit cost performance at BHP.
Okay. Now, Dino talked about the importance of China as a foundational partner, but there's obviously kind of continuing concerns about the Chinese economy for BHP. How do you see that?
Look, there's been a lot of publicity about the Chinese economy, and the BHP view is that the economy is performing strongly. It's looking at GDP of around 5%, obviously on a much bigger base. Every year the base gets bigger. Housing starts have been weak, but if you look at construction as a percentage of overall steel demand in China, it's around 25% today. 5 years ago it was around 40%. So emerging sectors like manufacturing, autos, green infrastructure, those sectors are performing very strongly in the Chinese economy.
And yes, in terms of its significance for the energy transition, how do you see China play? What role will China play in that?
a huge force in the transition, and that's largely through building out a lot of the critical infrastructure that's required, which to Dino's point is going to require a lot of steel, a lot of copper, a lot of nickel, a lot of those critical minerals that we'll be talking a lot about this week.
Okay, well, we're about to move on to a panel where that'll be one of the topics of discussion. So I'd like to thank you very much, James, for another interesting talk. Thank you.
Thank you, Jennifer.